Have you ever felt overwhelmed by the sheer complexity of investment choices out there? I sure have. But then I discovered something incredible, the power of AI in finance. More importantly, what it can do from a portfolio perspective, portfolio creation, construction, rebalancing, just an overall knowledge transfer. In this video, I'm going to share my personal journey of how AI transformed my approach to building a portfolio. I truly believe it was a game changer for me, and it could be for you. We'll explore how artificial intelligence isn't just a buzzword, but it's a real tool that can make a tangible difference in your financial future. First, let's start with composer trading. Now, I've went over composer trading before, but we're going to talk about its innovative approach. And if you're into automation and efficiency, Composer, Symphony are your go-to. Think of them as if-then that scenarios. So if I do something here, then that happens over there. They use what are called playbooks for trading. I've used Composer myself and can attest to some of the effectiveness in automated trading decisions based on certain set criteria. It's almost like having a financial conductor orchestrating your investment strategy. You look over here, one of the things inside of Composer is, let me stop real quick and say, if you are interested in a deeper dive in Composer, I'll put a link up here in the video so you can look at it. I've got a deep dive into Composer and what it can do. But first, let's look at some of the symphonies, as I've talked to them before, and how artificial intelligence can be used here. The first thing I'm going to do is, I'm going to go into the Discover tab. I'm just going to go very simple. I'm going to say, let's go copy some of the great portfolios or symphonies in the past. In this case, I'm going to copy what Warren Buffett's doing. What does this mean? Well, it means I'm going to use artificial intelligence. I'm going to use machine learning, if this, then that scenarios to say, I'm going to copy and I'm just going to basically buy VOO, VGSH, and cash. However, what I want it to do is I want it to hold, I want it to hold 90% here, and then we got 9% over here. These should actually be 90 and 10. So what this means is as your portfolio becomes, if we take $100,000, 90,000 goes into VOO, 10,000 goes into VGSH. But as things start to change and maybe VOO becomes more overweight and VGSH becomes more underweight, you start to sell off some of the VOO and buy more VGSH. Now, this is a very simple symphony. So actually let's make it a little bit harder. Let's see what Ray Dalio has here. All right, this is a little bit better of an example. In this case, we're going to use artificial intelligence. We're going to use playbooks, symphonies, whatever you want to call them, set rules to say, look, 30% in VTI, 40% in TLT. Those are treasury bonds. This is the total stock market index. I've talked about VTI before. We've got IEF, which is more treasury bonds. We got DBC, which is a commodity index tracking fund. And then we've got gold. Now we see different set weights here. So 30, 40, 15, 7.5, 7.5. Those all equal 100. And if I want to, I can go back over the years and see what it looks like. So I can actually go through and say, what does this scenario look like over the last 5 years? And using the power of automated trading and using the power of machine learning, I can see that had I bought this portfolio back 5 years ago, I actually would have lost money. I would have been better off just buying SPY and calling it a day. But what if I want to do something a little more interesting? What if I want to take one of these scenarios here? Actually, let's go back and we will go to Discover and let's look at a tech focus. Let's say I just want to get into big tech. All right, I scroll down here. These are all the names inside of this portfolio. One of the things I'm going to do is I'm actually going to copy this code. I want you to pay attention. I'm going to copy this code and I'm going to go over to ChatGPT and I'm going to take this code, I'm going to paste it in, and I want you to watch what happens. Now, ChatGPT, which we will be touching on later in the video, so stay tuned. ChatGPT knows that this is a symphony and knows that this is a specialization from an investment strategy or algorithm used in financial tech applications. It looks a lot like Python, if you're familiar with Python. It's very similar. And what it does is it tells me very quickly strategy name, I believe in big tech. Parameters, rebalance frequency is monthly. It should be rebalanced monthly. Strategy, weight equal. So if I go back here, it wants all the weights in these completely equal. So I should have the same amount of meta as Amazon, as Apple, as Microsoft, etc. I'm going to go into the description. Suggest the investment should be weighted equally. The strategy defines a filter process. So the filter considers the cumulative return of assets within a period of 20 days. In essence, the strategy seems to target large cap tech stocks. Now, what if I want to change this? Can you make a change for me? Okay, so now I'm using generative AI, using a large language model to help automate and change my investing strategy. Let's say I don't want to be invested in a couple of these stocks. So please remove, we'll say Adobe, and I'm just picking these at random, PayPal, and we'll say Meta, and replace them with something safer. Now, immediately, it's going to come back with a suggestion, and I'm using artificial intelligence here to make the change, to help me understand what I'm doing, and to guide me as I go through. So it talks about to modify the strategy by moving these three, replace them. We need to choose our alternatives that are generally considered more stable or less volatile. Exactly. Safer investments include companies with a history of stable growth, dividends, or volatility. We might consider large cap stocks. So without specific companies or sectors, I'll select a few large cap diversified names. So I didn't have to know that Johnson & Johnson, Procter & Gamble, and Coke are good suggestions. It did it for me. Now, I will caution you, that doesn't mean you should automatically invest in these into your Symphony or just in general. You still need to do your due diligence, but I'm automating more. I'm having a conversation. I'm talking to it in plain, natural language to help understand and go through this scenario. So in this case, it's replaced Adobe, PayPal, and Meta with some safer names, Johnson & Johnson, Procter & Gamble. Now, what I can do here is, it says this version maintains focus on big tech with Amazon, Apple, Microsoft, and NVIDIA while adding Johnson & Johnson. Now, what I can do is I can copy this code. I can go back in here, and if I want to, I can go in here and create a brand new portfolio. I can actually create it with AI, or what I can do is I can come in here and say, I'm just going to drop this code that I created, and then I'm going to back test it. There we go. Boom. So I've still got my Johnson & Johnson, Procter & Gamble, and Coke. I've still got my original NVIDIA, Microsoft, Apple, Amazon, and Google. And now I can go back here and see what this actually looks like over the last, say, let's do 5 years. And if I go look at 5 years, I actually would have made money. So just instead of buying SPY or SPY, building out this Symphony using artificial intelligence, I would have made about 23% more of a return, and my initial value at $100,000 would actually be $163,000. There's not a lot of slippage there. My beta still, in this case, let's see what the standard deviation is. It's a little higher on this. The Sharpe ratio still looks pretty good, but as you can see, in real time, I've changed it. Now, if I want to come up here, actually in the Symphony, I can do that. So I can come down here and say, immediately, I'd like a portfolio that benefits from demand for GPUs. The composer uses OpenAI on the back end to connect to it to make these suggestions. So if you've noticed, if you're paying attention, you'll notice that the code that you see here is very similar to the code that you see here. So we're just creating it here inside the platform instead of going out into ChatGPT. Okay, so that's number one. That's the first part. Number two is we're going to go into another. Actually, real quick, I'm going to link these articles down below, but we've got a couple articles here that talk about is Composer actually a legit platform for artificial intelligence, backtesting, pricing, etc. I'm not going to go through those. I'll leave those down below. So the next piece we're going to go over into is Wealthfront from an automated investing standpoint. And again, I have a full video on Wealthfront. I'll make sure to link it down in the description if you're interested. But Wealthfront's a little bit different than Composer in the sense that you're not picking individual stocks, but you're using what's called automated index investing. Wealthfront is where it gets interesting for those who prefer a more hands-off approach. So Wealthfront uses sophisticated algorithms tailored to risk tolerance, investment timeline, and capital. I'm going to walk you through how it simplifies investments for individuals who want to set it and forget it, ensuring your portfolio is managed efficiently without daily involvement. So if you want a more hands-off approach, you still want the automation, you still want the algorithms, and you still want the set it and forget it, Wealthfront could be a really good option for you. In this case, for me, this is my portfolio. I'm going to go in here and look and say, all I'm doing in this case is I'm not buying individual names. These are all filled with ETFs that mirror my risk tolerance, my timeline, etc. So in my case, my US stocks are VTI, ITOT, VXF, and I've got some direct indexing. And you can also see I've got dividends coming soon. To bring that up, let's talk about that. One, I'm not getting in here every day and making choices. Two, I'm letting the algorithm run it for me by saying, here's how much money I'm putting in, here's my risk tolerance. And then three, I'm collecting dividends. Four, I'm tax loss harvesting automatically. And I don't know, for those of you that have never tax loss harvest yourself, you know it can be a real pain in the butt to have to go in and sell out positions and buy a similar one. And you're spending so much time doing that. I'd rather let an algorithm like Wealthfront make that decision for me. So I think it's a very good use of my capital, and it frees me up from a time perspective. Now, in this case, let's talk about what it actually looks like. So I go in here, I can actually go in and edit portfolio. And this is where you'll see some of the machine learning and the artificial intelligence kick in, where I've got a certain risk level. It'll actually ask you what's the right risk level. If you come down here and change this and say, I don't want to be as risky, it's automatically in real time making suggestions for you based on your risk tolerance. So as you can see, let's actually go back to the risk level 10 out of 10. This is the risk it can be. I'm only 2% bonds here. So bonds are a very stable investment. You know what you're getting. You're getting a payout at the end of the coupon expiration. But stocks are generally more volatile. Now, as I reduce the risk, automatically, it's making these changes for me. If I go down to the lowest risk level, my biggest holding and biggest position is going to be the Vanguard Bond Index. Stocks are only 18%. Dividend growth stocks are 17%. U.S. stocks, I should say, are 18%. So you end up holding a lot less stock and a lot more bonds. That's one way they automate. Number two, when I go into the automated or the tax loss harvesting perspective. So when I look up here, when I get into my portfolio again, it'll actually tell me tax savings. So I've actually saved money here just from a tax perspective. So I'm not having to worry about manually tax loss harvesting. I think that's an incredibly powerful thing for people to reduce their tax bill automatically. You don't have to think about it as your capital gets put in, direct indexing at a certain level for some portfolios, but no matter what, you're getting that tax savings, which is just absolutely incredible. All right, finally, the last part, number 3, and I know everyone's probably thought I was going to lead with this, is ChatGPT. So let's talk about the role of advanced large language models like ChatGPT or Bard in portfolio building. These tools can be invaluable, as you've seen, in providing education, guidance, research assistance, portfolio construction, whatever it is. I'm going to demonstrate how ChatGPT can help you construct and fine-tune your portfolio, making sense of the world of investment opportunities. I would say it's like having a knowledgeable assistant at your fingertips to demystify the complex concepts. So we already jumped into ChatGPT and saw what that looks like. Now, there are different GPTs, different GPTs inside of ChatGPT. I know it's a little confusing, that are more tailored to certain things. So maybe it's portfolio construction, maybe it's understanding what complex financial terms mean, maybe it help you understand what tax loss harvesting is, etc. Now, first thing I'm going to do is I'm going to just go in and say, hey, ChatGPT, you are now the world's best financial advisor. Oh man, I cannot spell today. Please educate me on tax loss harvesting as if I'm a 12-year-old. Now, I want you to think about that. Before, if you're unfamiliar with finance and you don't know what you're doing, what would you do? You'd either start to go to Google, you'd look it up, maybe you get a definition of it, maybe you don't. Maybe you get a definition that you understand, but you don't get really any examples and you're not having that conversation. So artificial intelligence makes it easy for someone who has no idea what finance terms mean. They don't understand what tax loss harvesting or direct indexing or margin or any of that stuff is. Let's look at what it says. All right, imagine you have a small garden where you grow different types of fruits and vegetables. Some of the plants do really well and grow big, others don't. In the world of investing, and just like in gardening, not everything grows as expected. So identifying the not so good plants, those are the investments, pulling out the weeds, selling the bad ones, right? Planting new seeds, buying new investments, saving on your gardening costs. When some of your plants don't grow well and you pull them out, it's like it's like showing that not everything in your garden did great. In investing, you can sell those at a loss, at a capital loss, and help offset on your taxes. It's like getting a discount on your taxes because some of your investments lost value. Now, how easy was that to learn and understand? From a portfolio construction, which we're going to get to in a second, it becomes even easier. So as I ask ChatGPT, hey Chat, I'm new to investing and I need help. Can you please build me a portfolio of stocks and bonds for my risk tolerance, age, and capital assets? Now let's watch and see what it does. Absolutely. So we need to go through a couple things. And again, this is much like talking to an advisor. I'm not saying you should immediately trust and do exactly what ChatGPT says, but what I am saying is you can take this with a grain of salt and use this to better yourself. So from a risk tolerance standpoint, let's just go through. Risk tolerance, yes, comfortable with high risk. Let's go 2. Let's say age, 25. Let's say 3. I'm going to put in 100,000. Actually, you know what? Let's say 10,000. 4, long-term investing. 5, no specific areas. So that took me all of 30 seconds to get that filled out. Now it's going to come back. It's going to give me a sample portfolio allocation. All right, perfect. Stocks, 80%. U.S. stocks, consider a mix of individual stocks. International stocks, it's got some bonds. It's got some considerations. Perfect. Can you build out a visual of this with graphs? Now, this is where it starts to get interesting. Through the power of ChatGPT 4, it's actually going to use what is called Dalio on the back end to build a visualization. It's going to go through and reach out to the internet and see what visuals are already out there. And then it's going to look at what it gave me. There we go. Perfect. Sample investment portfolio allocation. So it's telling me I need 40% US stocks, 20 bonds, 16% small caps. And here's where it starts to get really interesting. Hey, can you build out a line graph and pie chart of this portfolio with a simulation over 30 years? All right, so it's going to make some assumptions. So in this case, you want to know what it looks like in the end, right? We all do. So if I invest now, what's it going to look like in 30 years with a 7% return on US stocks, international, small growth, high growth, high yield bonds, etc. Well, there we go. So within, 10 seconds, I've got a portfolio. I can see what this looks like. So an aggregate of a $10,000 investment now in 30 years will be worth a little over 60. Let's look at the initial portfolio allocation as well. So again, I've done that all within, I want to say 5 minutes. I've shown what this could look like. So I'm not going to get into some of the other ways. There's some other articles here I'm going to link down below. These are 10 ways to use ChatGPT for finance. We've got report generation, text data. We've answered some questions. We created investment summaries. You could even have it summarize 10Ks of a company. You could have it simulate training and trading scenarios, kind of a what if scenario. We've seen how ChatGPT is used with Composer on the back end to pull the data in. But as we look into the future and we see what might be possible, I want to know, what do you think you want to see? What would you like to see from artificial intelligence? Do you trust it? What does that look like? And as always, don't forget to design your financial freedom. Take care. Bye-bye.